Hello everyone and welcome back to the channel. I'm Charles Kim, a real estate agent based in Irvine, California. Today we're taking a look at the latest Orange County and Los Angeles County housing market update and discussing what current market conditions may mean for buyers and sellers as we move further into 2026. Before we dive into local numbers, let's start with the bigger picture. Real estate doesn't operate independently. Housing markets are closely connected to mortgage rates, inflation, employment, and global events. One of the biggest stories this year has been interest rates. At the beginning of 2026, mortgage rates had started moving lower compared to 2025. That brought many buyers back into the market and increased activity during the spring season. However, geopolitical tensions in the Middle East, particularly involving Iran, created new concerns about inflation and energy prices. When inflation concerns increase, bond markets react, and mortgage rates often move higher as a result. This is why events happening around the world can directly impact someone buying a home here in Orange County. Even small changes in mortgage rates can significantly affect monthly payments, especially for buyers using jumbo loans. And that's particularly important in Irvine, where many homes require financing well above conventional loan limits. Now let's talk about Orange County. Inventory has increased slightly compared to earlier this year, but supply remains well below historical averages. Many homeowners are still holding onto mortgages they obtained during 2020 and 2021, when rates were around 3%. This lock-in effect continues to limit the number of homes coming onto the market. Demand, meanwhile, remains relatively stable. Compared with the same period last year, buyer activity has changed very little. That's one of the most important takeaways from the current market. We're not seeing a housing boom or crash. We're seeing a market that has become more balanced. Buyers have more choices than they did a few years ago, but desirable homes continue to attract strong interest. Market time has increased compared to the pandemic years, which means buyers generally have more time to make decisions. However, well-priced and well-presented homes still sell quickly. Let's focus on Irvine for a moment. Irvine continues to be one of the strongest housing markets in Southern California because of its schools, master-planned communities, employment centers, and overall quality of life. At the same time, Irvine is more sensitive to interest rates than many neighboring cities because of its higher price points. When rates move lower, demand tends to increase quickly. When rates rise, buyers often become more cautious. That's exactly what we've seen over the past few years. Another interesting trend is that many homeowners who don't receive their desired price are simply choosing not to sell. Instead of accepting lower offers, they're pulling their homes off the market and waiting. This behavior continues to limit inventory and helps support pricing throughout Orange County. The luxury market tells a similar story. Higher-end homes are still selling, but buyers are taking longer to make decisions. As prices move above $2.5 million, the buyer pool becomes smaller and more selective. Luxury homes are not struggling because of a lack of interest. Rather, buyers have become more patient and more analytical. Los Angeles County is showing many of the same trends. Inventory has increased modestly, demand remains steady, and the market continues moving toward a healthier balance between buyers and sellers. So, what should we expect for the rest of 2026?
The answer largely depends on mortgage rates. If inflation continues to cool and rates move lower, we could see stronger buyer demand in the second half of the year. If rates remain elevated, the market will likely continue at its current pace. For buyers, this means staying informed about economic data and being prepared when opportunities arise. For sellers, success continues to come down to preparation, presentation, and realistic pricing. Homes that are move-in ready and priced correctly continue to outperform the competition. To summarize, both Orange County and Los Angeles County remain fundamentally healthy markets. Inventory remains relatively limited, demand remains stable, homeowner equity remains strong, and while challenges certainly exist, we're not seeing signs of significant distress. The biggest factor to watch moving forward remains mortgage rates. They will likely play the biggest role in determining how the market performs during the remainder of the year. Thank you for watching today's market update. I'm Charles Kim, a real estate agent based in Irvine, California. If you have questions about buying, selling, investing, or simply understanding today's market, feel free to reach out. You can contact me at 760-844-2360. Thank you.